Hi guys, welcome back to the TipRanks channel. My name is Annika and I really love to hear what you guys think of different stocks you guys are looking at. So make sure you leave your thoughts in the comments below. Today I'm looking at two big dividend yield stocks that analysts deem a buy. So guys, we only have 7 weeks left of 2021. This year absolutely flew by. And loads of Wall Street's big names are firming up their year-end forecasts. So that means there could be quite a few opportunities for investors. But it still remains to be seen how the markets will move next year. However, Wall Street analysts are picking out the best stocks for investors to look at. So the first dividend stock that yields at least 9% in dividend yield, and its ticker is in its name, it's MPLX. MPLX is a large cap master limited partnership company that was formed by Marathon Petroleum in 2012 to own and operate the parent company's midstream assets. These assets include energy infrastructure logistics, including pipelines and fuel distribution services. Marathon retains a major interest in MPLX, up to 20.4%, including controlling interest as a general partner. MPLX shares have been appreciating in the past year. The shares are up 61% year to date. So MPLX's network of midstream assets includes terminals, refineries, and river shipping, as well as pipelines and stretches from the Rocky Mountains and the Midwest to the Gulf Coast. Storage facilities include above-ground tank farms for crude oil, petroleum products, and below-ground cavern storage for liquefied natural gas products. The current price for MPLX is $30.41, and the analyst rating consensus is that it's a strong buy, with an analyst price target on MPLX of $35.38. This is a 16.34% upside based on 8 Wall Street analysts offering 12-month price targets. MPLX reported its Q3 2021 results early this month. At the top line, revenue came in at $2.55 billion, and this was up 13% from the year-ago quarter, and the 5th consecutive quarter of sequential revenue gains. The net income for the quarter was $802 million, and this was up 21% from the $665 million reported in Q3 of 2020. MPLX reported generating $1.2 billion in net cash from operations and returning up to $900 million of that to shareholders. They had a strong cash flow and lower capital spending. The cash to shareholders broke down to $155 million returned via share repurchases and $745 million through distributions, or let's say dividends. The company declared its Q3 dividend payment at $1.28 per common share. The dividend includes a 70.5 regular payment plus a 57.5 special payment. The regular dividend is up 1.75 cents from the previous payment and annualizes to $2.82 per common share. This gives us a yield of around 9.12%, approximately 6 times higher than the 10-year Treasury bond yield. 5-star analyst from RBC Capital, T.J. Schultz, is impressed by MPLX's cash flow and dividend, and he wrote of the company, "We view the special distribution as a useful lever to pull as MPLX has considered ways to return capital to unit holders. We like MPLX's steady cash flow model, which has been bolstered by recent Permian to Gulf pipes coming online this year. Looking ahead, we think FCF remains robust, which provides MPLX plenty of flexibility to toggle between increased dividends, base or special, buybacks, and pursuing attractive growth prospects." The second dividend stock that analysts deem a buy that delivers at least a 9% dividend yield is Monroe Capital, and its ticker is MRCC. Monroe Capital is a Chicago-based asset management firm. This middle market lender has invested heavily in health, media, retail, and tech sectors. They provide direct lending, asset-based lending, opportunistic and structured credit, as well as specialty finance solutions for their clients. Monroe's clients typically borrow between $3 million and $35 million. And the target borrower has a proven growth strategy, a strong market dynamic, and experienced management. The current price for Monroe Capital is $11.54, and the analyst rating consensus is that it's a strong buy. The analyst price target is $11.58, which is a 0.39% upside. In the most recent quarter, Monroe's net investment income reached $6.3 million, and this was up from $5.6 million in Q3 of 2020. Company's earnings have remained stable and ticked up in the most recent quarter. The EPS in Q3 came in at 29 cents, up 11% from Q3 of 2020. The EPS, however, is of more interest to dividend investors. At 29 cents, it was more than enough to cover the 25-cent per common share dividend payout declared in Q3. This dividend has remained stable for the past 6 quarters, but the company has a reliable payment history stretching back to 2012. The annualized rate of $1 per common share gives a yield of 9.2%. Monroe Capital also has a proven track record by winning many awards. They won 2021's Best U.S. Direct Lending Fund of the Year by Credit Flux. PensionBridge awarded them in 2020 as the Private Credit Strategy of the Year. They also won Private Debt Investor Awards in 2020 and the M&A Atlas Awards in 2021 for Mid-Markets Lender of the Year in USA. They also won an award as Lender of the Year in 2018 by Mergers and Acquisitions. So guys, what do you think of these 2 strong buy stocks that have a dividend yield of 9%? We love to hear what you guys think, so please leave in the comments below what you think of these stocks and of the different dividend stocks you hold in your portfolio. Remember, this is not financial advice, but if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. I will see you guys in the next video. Bye!